This one comes from the Kobisi letter. Gold markets are rewriting history. You know, we talked about gold being in a bear market. We obviously talked about the huge move higher. Now it seems to be leveling off. Gold markets are rewriting history. Assets under management, or AUM, is the largest, in the largest U.S. gold-backed ETFs, GLD, are up to 181 billion, and that's near the highest on record. The asset under management in GLD has doubled in less than a year. Doubled in less than a year. Over the last 8 years, the value of the fund's asset has surged 503%. Furthermore, gold holdings in GLD are up to 1,098 tons. This is the highest since April of 2022 and the second highest since February of 2021. Gold holdings have increased 274 tons since March of 2024. By comparison, the all-time high set in December of 2012 was 1,351 tons. Demand for gold investments is still unprecedented, and I think that this really plays into the gold trade here, right? This is why I would assume, for any of you that are gold bugs out there, let me know. But for me, it sure assumes this, to me, seems like, yeah, buying the dip in gold, probably a good idea. My big fear is that gold moves so violently to the upside that even a normal 50% retracement still is going to invite people to get long gold at elevated levels. But I'm curious for you folks what you think. Really quickly, since we're going to do ticker time anyway, let's go back here real quick. Let's take a look at the gold chart. We can also take a look at silver, by the way, if you're interested in that. Where is the buy spot here for gold? Now, it sure looks like it's bouncing off of 400. We also had this previous resistance area that should now act as support. And then here through 2025, the end of 2025, we had a consolidation area. I'll be honest, looking at this actually looks like not a terrible spot here for gold. But given its huge run, I could absolutely see this pulling back. Let's take a look in sign up, and that's not going to really show us a whole lot. The other thing here is that we have the 200-day here sitting at 375. And very much like I think about the SPY, I would rather, if I'm going to buy the dip, I would rather wait till that dip comes into a support level. And then further building on that, just taking lessons that we've got from Mark Petrino about maybe waiting for it to confirm that it's going to bounce instead of trying to catch the knife or hit that exact point. Maybe wait and see if this confirms it's going to bounce here.